Ladies and gentlemen, welcome to the SoFi Weekly. Today, I have the great and powerful Roy Crossroads. So sorry to Tevis's chat. I know some of you guys are in here, but I don't think that he could face up to the fact that he had sold shares and now the stock continues to run. It's a pretty harsh thing to watch from his perspective. So I get why he's not here. We tried waiting out as long as possible, but it's okay. Roy, how you doing?
Doing good. Not selling my shares. That's what I'm doing.
Yeah.
Actually released I don't do too many SoFi standalone videos, but I did one today on I'm not selling SoFi. I was like, I will at some point, but a lot of people I've been asked a lot of times, actually, probably more on SoFi or maybe as much on SoFi as Palantir, which is weird. And people are like, well, are you taking profits here? What are you doing? Maybe it's because I have leaps in the name. I don't know, but I'm like, I'm not ready to do that yet.
Sure.
Plenty of time.
I have a big list of news that ended up happening this week. So we have lots to cover, but even some things that happened today. But I actually didn't end up doing a FinTech Frenzy today. I essentially just took the day off, and hopefully people can forgive me on that. But
Never.
No, I just simply went to like a spa resort thing and just hung out with my girlfriend for the day. It was a lot of fun.
I thought you were supposed to be focused on.
Sorry, go ahead.
I thought you were supposed to be focused on stocks and everything 24/7.
Yeah, I know, right? I know, but don't worry, guys. I'll work fully throughout the entire weekend. I told my girlfriend, I was like, you don't get me Saturday and Sunday. You took my Friday away from me. The chat's gonna be pissed. So I'll be working 48 hours straight. I'm not even allowed to go to sleep. So lots of FinTech frenzies to come. Ladies and gentlemen, please welcome the fashionably late, but he probably did his hair or something, so he's going to look beautiful. Tevis not in.
So you don't even have to try to look that good.
He did do his hair. You got a haircut or something. You're muted.
Yeah, a couple of days ago.
Oh, okay, cool.
I can't get my camera to work. I got a new computer, and so that it wouldn't freeze, which it's great, a lot more processing power, but the software that I had to have my camera isn't working. So got to figure that. I was trying to figure that out behind backstage. But
can I just ask, did you get a new M4 MacBook?
Yeah, exactly.
Did you get the Elgato software that allows you to share your phone camera? Is that what you use?
Yeah, that's not working. So I'm just natively sharing my phone camera because it's picking it up, but I can't zoom in or anything. And so I'm going to be to the side unless I turn this, I guess.
Yeah, I think we'll be in this frame probably for the most part.
Yeah.
Tevis, how was the week for you?
It's good, man.
Yeah.
I mostly trading options, but great.
Yeah. And SoFi shares still holding at about 90%?
Still holding 90%. I made some money on cash secured puts on SoFi, and probably going to repeat that process next week. So yeah, life's good.
All right, cool. So we have a big list of news. Why don't we just start jumping through it? Probably the oldest news, we covered it last week, or at least it happened last week, but it was pretty big, so I wanted to cover it again. The SoFi expanding with Templum. Now, there was essentially supposedly large jump ups in SoFi downloads because of this SpaceX news. Do you think that SoFi is going to be getting new investors purely just for SpaceX exposure due to Templum offering Cosmos funds?
A few, but not many. Realistically, if someone's already rich enough to be able to go through a private venture fund, they're in. I know retail wants to be in that name, but it's if you read the fine print here, you're not going to get in unless you have a pretty considerable amount of wealth anyway. So you probably still would have been able to invest previously, but I could be wrong. It is nice to see the spike in downloads. I don't know. I'm kind of curious if that's like a seasonal thing. But yeah.
It might not have been. I remember DDI posting about this. It might have been Google Trend searches for SoFi after the Templum search. Kay said, you guys are the best. I'm up 170%. Kay, that's 100% you, man. We can't tell you when to hold, when to buy, when to sell.
It's 170% him, in fact.
Yeah. What did I say?
You said it's 100% you. It's like, it's 170% him.
Oh, sorry. Yeah. 170. That's your stomach, brother. You held that, or maybe girl, I don't know. Kay, I guess, is pretty, whatever. But yeah, congratulations to you on that hold. All right. Let's go on to the next piece. Or unless, Tevis, do you have anything to say about that? Do you think that people are coming over just for SpaceX funds?
Probably, yeah. Same as Roy. Like probably some, but not a amount that would make it anything significant.
Sure. A little bit of crypto news. Crypto, like, we have the Robinhood Weekly on Monday, me and Roy, and we just got the best news possible in terms of how much volume they're getting, and retail wants crypto exposure. That's essentially the highlight here. SoFi did have a crypto, trading product, but then it got taken away from us due to banking regulations. It was part of the, deal whenever we actually got accepted or approved as a bank. Now, DDI said, if regulators permit banks to act as crypto brokerages, SoFi will be amongst the first to end up offering this. And like you see here, Anthony Noto said, if regulations permit, bringing crypto back to the SoFi platform would be the plan. What are your guys' thoughts there?
He's right, but if should be in all caps. It's not guaranteed. I think that it's likely at some point. It seems like it's a fairly crypto-friendly administration, but these things take a while, especially when it comes to bank charters, to spell out very clear regulation. And so I would not expect that probably it might even be a few years from now, honestly. I wouldn't expect it next year.
Tevis?
I mean, we're going to get a crypto-friendly administration. I don't see why it shouldn't happen. I think Trump was appointing also people like Isaacman and others that, are going to be voices in the room that are in the fintech / banking space. So, yeah, I don't see why it can't happen. The only matter, like it's more of a question of when in my mind rather than if.
Yeah.
Because, I don't know that it can happen in 2025, maybe, but the man's going to have a 4-year administration. Like they can take their time with a couple of things.
I actually do think it's going to happen in 2025. And I'm surprised by Roy's answer, because we heard from the same person whenever we were at the event in New York. We asked Vlad about this, and he said, if they're going to move super fast. So we think that a lot of regulations around crypto are going to open up in 2025.
But this is more complicated than just regulation for crypto. It's a regulation also for banking charters related to crypto, and those tend to move a lot slower. It's not the same animal.
Yeah, sure.
And so I think that even though it's going to be a priority, like they're going to do the easy stuff first. So like clear regulation that actually benefits Robinhood, Coinbase, and so forth. And then they'll move on, usually the slower stuff, and they'll have to have committees and panels, and it's the government. So, you can count on that taking much, much longer than it should. If it was a private business making the decision, yeah, you got like 3 weeks. You're good.
Yeah.
So,
yeah. And by the way, Dan Gallagher, an unbelievable asset. Such an amazing guy to be able to listen to at the Robinhood event. Man, I want it to be Monday so bad. There's such exciting stuff.
Yeah, Robinhood has a lot of good news.
I love seeing monthly metrics, man. It's like having multiple quarterly reports every single quarter. It's awesome.
By the way, somebody asked me yesterday. They're like, "Oh, you guys, I guess Jesse Dow, or they heard Jesse Dow say this. I don't know if Jesse actually said this or not, but he's like, maybe those guys are getting paid by Robinhood." It's like, if getting a cap by going to an event counts, I guess, but no,
Yeah.
they are paying a lot because the stock is going up, and I own a lot of it that I bought with my own funds. So, but it's kind of this. It's at least there kind of makes sense versus like the accusations labeled against you too, and Chris as well, on pumping SoFi, which obviously failed because it was like at $6 a share. So
Yeah, I think whenever we went, Robinhood hooked us up with a little bit of sushi, some baked goods, and I don't mean like a lot. I mean like it was just things to nibble on essentially while we were doing the investor presentation. Aside from that, it was flying down there, getting hotels, doing all that stuff was all on our own dime. It's probably like $1,000 for me to go down there, including all the travel, Ubers, everything like this. But it was worth it. Like, I got to meet friends, got to go see Vlad and the team, and get a bunch of DD and meet a bunch of Wall Street analysts that I've been covering. So it was more of a meet and greet than them, pumping us or something like this.
I will say, I like the hat. The shirt's very nice. The water bottle. These are things that everybody got. All 800 people, at the event, and it was nice.
I want the hat that you have. That's a nice one.
Yeah, I had two of them, and I didn't realize that they were actually different styles. And yeah, this one's very high quality. The other one was like, it's fine. It's nice.
I don't know what it is with the camera though. Yours makes it look like it's like ultra like perfect black. Mine looks like it's already like graying.
It does look like that, yeah. It actually matches.
Mine's black. I don't know why.
It's because of all the lights. Somebody said on the chat, like, Tevis, you look like you have more gray hairs this week. It's like, yeah, I replaced 2 light bulbs in my spotlights. That's why. It's the same effect with your hat.
Yeah, no, I've got way too many lights above my head as well. Okay, guys, we got the B of A downgrade this week. $12 a share. SoFi is currently sitting at $16.25. Seems like it ate that news for a couple days, shot back up. We closed positively. What did you guys think about that report? Did you end up getting to read it?
I think I read it. Yeah, I either read it. I think it was pretty short, actually. Was it not 2 pages?
It's like a one-pager.
One pager. Yeah. It's kind of a nothing burger. I mean, like, these things happen, and I do fault them in one way, and I credit them in one way. One is, even though the price is running for SoFi, they're holding to their convictions as far as where it can and should go. And so before, it made sense that they were, outperform. I don't think it was neutral before. And then they switched because it's like, hey, the price it ran further. A good analyst will actually say, no, I think that this is a price target, even though the market is saying something otherwise right now. Versus the typical analyst is like, oh, Palantir shot up to like 70. Let's put an 80 price tag on it. Shot up to 90. Let's put 100. Let's keep front running. Tesla, same thing. Like, you see these things, same company, not much has changed. I mean, some has changed on both of those, but yeah, so credit to them on that. They did say in their note that part of the reason for the price target and the downgrade as well was just price action. Like, that makes sense as far as the downgrade and exceeding the price. It kind of makes sense, but it's not the price action itself. It's just the price they don't like. So
you respect them for keeping their same rating. Like, by that same measure, you must have the utmost respect for Cavarini. He still has a $5 price target on the stock.
Well, 12 isn't crazy. I mean, it's below my fair value range, but it's not ridiculous like Cavarini's. Cavarini's is just like, he's the Gordon Johnson of SoFi. He has no idea what he's talking about, including like that weird pair trade. Like, I don't know. I don't want to say something too negative about him because I don't know him, but I think it's very, very sloppy work.
Yeah, I think it's definitely weird whenever you justify, like if you're increasing the price of the stock and all you're changing is just the multiple on the company, it's a little bit weird to me. Like, either stick to your guns or
dude,
like, I don't know.
They quoted their EPS 2026 guidance being below what management is saying. Like, guys,
but above Wall Street analysts.
Come on, what, like 4 cents above Wall Street analysts? Like, Wall Street analysts are 48, they're at 52 or something like that. Like, guys, you live under a fucking rock. Like, these guys have 2 straight years of like triple beating, and these guys are like, you know what? I don't know that management can pull this off. Like, I put out a tweet and I was like, look, man, I hope management with the end of the year actually raises their guidance because now they have more information to go off of. They're going to issue 2025 guidance. So why don't they raise 2026 again to say, hey, actually, it's not 55 to 80. It's now going to be, I don't know, 70 to 90. And then, then all the Wall Street analysts who have an average of 48 on EPS for 2026 are going to look stupid.
Yeah, no, I agree with you. The funny thing is about B of A is that they're one of the most bullish on 2024 earnings. A lot of people are saying 11 cents, 12 cents, 13 cents. They said 14. Okay. So they're super bullish on full year 2024. They're very bullish on full year 2025, and then just far off the mark for 2026. I don't even know who's the most bullish on EPS for 2026, but it's not even like the middle of what SoFi is guiding for. I don't know what the highest one is. I think I've seen one at 60 cents. And that might even have been Mizuho, but none of them are even at 68 cents, which is the mid-range of their guidance. It's hilarious.
The highest is probably Stockgoat, and then me, and then like data-driven investing, and then you, and then Roy, and then all the Wall Street analysts.
I don't even have really one. I'm just going off of 68 cents, but it probably will be over 80 if I had to guess. I think the only thing that people aren't pricing in probably should have been in my bear case video, but is they said, here's our EPS, and this is not accounting for new products. But new products don't always bring EP. Everyone's saying that as if it's a positive. But if you look at financial services, for whenever that started to get started, it was only losses. Like it was contribution losses continually. So if they do get into SMB banking, will it be more additive to the business or a little bit subtractive in the short term? Like
probably a little bit of both, depending on what the product is. Honestly, like they can launch a referral thing, and they, or loan platform business, which I know you responded to that post. You were saying, loan platform business might have already been accounted in the 55 to 80 cents, but I don't know that it was accounted to that same degree of acceleration. And that is super additive to bottom line for
100%.
So like
every referral product will be straight bottom line. Like,
yeah, like if they double up loan platform business in 2025, because you now have a more favorable administration, you now have better macro environment, you have lower rates, whatnot, like that in itself can blow that EPS range out of the water for 2026. And that wouldn't have been accounted for in the beginning of 2024, as an example.
Yeah. What Tevis is referencing, by the way, is he put out a tweet saying that we're essentially looking for 55 to 80 cents of EPS, and that's not including. There were two of them. One was the loan platform business, and the other one was what was the other one? I'm forgetting. New credit cards. Was that it?
I just said new products.
Okay. Maybe I'm thinking of another person, but yeah, there were a couple floated ideas of, hey, these are accretive to the business that weren't potentially looked at whenever they originally gave the guidance, which was in Q4 of 2023. And we really got to see loan platform business in Q3 of 2024. So there was a good distance between when we knew the product was coming out, but they've been guiding for financial services at 80% for a while, probably around Q1 of 2024, when they knew that there was going to be substantial financial services growth. And we were all looking at that saying, hey, we can't guide for that. Like it's incredibly large. Like they are expecting some massive ramp up in members. What it really was loan platform. So where was that whenever they knew that they were going to have a product like this on the field? The only reason why I said that they might have known, they've been going really hard for Lantern Marketplace stuff or financial services being offered to a wider audience than just SoFi for, since they've been a public company. So I bet they had loans on that for some time.
Yeah, it's possible.
Well, not only that, but they also released their first product of that sort. I have it somewhere here. I'll try to find it. At the beginning of the year, they released like their first deal that was like the loan platform business. And then we've got more towards the end of the year. I'll try to find it. Circle back to me because I have a list here.
Yeah, we did refer loans before, like Pagaya is technically referred loans. We just weren't underwriting them.
Yeah, exactly.
So this is the first quarter where they're actually underwriting those loans. And why don't we just go ahead to this? So let's talk about a different company really quickly that's a competitor or in the same industry as SoFi. Oh, why is that doing that?
Affirm.
If you guys say Robinhood, I swear to God.
It's Affirm. Max Levchins.
It is Affirm. Affirm and 6th Street announced a long-term capital partnership to invest up to $4 billion in Affirm loans. Not only this, they have the ability to extend this partnership up to $20 billion, is what I think it is. It's an unbelievable deal, the largest of its kind for SoFi. What do you guys think this means for SoFi, though? Like, this is essentially people are showing off, hey, like, fixed income products are super hot right now. Affirm's landing massive deals. This can't just be focused solely towards Affirm. There's going to be some spread out amongst potentially higher FICO, higher income companies like Lending Club or SoFi. Are we going to get a piece of this action in Q4 as well? Roy?
I mean, the lending platform is there to do just that. And I think they'll have no problem selling a lot of loans, making a lot of profit for the financial services platform. So, yes. And I mean, I think that we'll see a lot more of these type of deals as well. I mean, we could even see more for SoFi themselves, even though they just launched this lending platform. If there's a whole lot of demand, and demand will continue to increase as rates slide. By the way, on that, December 31st is the actual decision is December 18th. So it's coming up next week. 96% probability to cut at this point. So it's good for SoFi. Good for lenders.
Good for lenders. Good for lenders. I heard a question really recently on one of my live streams. They said, do you think we're going to see $2 billion of loan platform business sales in Q4? Tevis. In Q4.
Yeah, I'm not sure.
Going to double down on the loan platform business.
I don't see why not. Like, it obviously depends on the macro environment, right? And then we have to wait to see what management guides for. I think that's going to be the main thing, right? Because throughout the next 4 weeks or so, it's going to be pretty radio silence to that degree. Like, we might get a couple of PRs here and there, but really the main event is going to be at the end of January when management provides their full year guidance for 25, because that's going to be an opportunity for us to have a look behind the curtain as to what they're planning for more growth. Now, management has always been somewhat tight-lipped about that stuff. They don't really announce too much, but the actual report itself, like none of us were expecting the 2026 guidance last year. And so I think that similar things can come out, accounting for new product lines. Last week at the UBS Fireside, Chris Lapointe said, hey, SMB or insurance are things that we're not principal right now. Like, we can expand into those. And so I'm looking for more of those little nuggets that management drops on the earnings call or even before through press releases, because technically the quarter is going to be done like very soon. And then they have like a month gap for them to report. So yeah, I'm not really like too concerned right now. But I think that by January, we're going to have an inkling of like, hey, this is the direction that they want. Like, for example, when was it, Q2 or so? I think it was Q2, where they were like, hey, we see a massive opportunity in credit cards. We want to double down on credit cards. And then in October, they released new credit cards, and Anthony Noto went on the whatever fireside it was. And he said, hey, look, this is how the credit cards are going to work. And they drop PRs around that. Like, I'm waiting for another event of a similar nature when they report earnings in the end of January.
They've been doing that in their earnings. I think that they've been listening and they're like, hey, they just want to hear what they've been working on. And so there's this little segment that they've been doing the last couple of quarters where they're like, hey guys, we have been working. What you need to focus on as well is, these things. We got new robo advisors coming out. We got new credit cards coming out. All those things were announced on earnings calls way before we actually saw the real press releases. Yeah. So hopefully we do see more of that in Q4. Cash Coach was another one. It's still not even released. So that is very exciting. I think if there is going to be a big catalyst that happens before the end of the year, it's going to be exactly like what Affirm posted. Like oh, BlackRock doubles down. They just signed for another $1 billion of loans for securitization, or some on SoFi buying direct and some for the loan platform business.
Or a flurry of tech platform announcements.
We'd love that as well. We'd love that. But hold on, because you're going to push me into another story. I just want to keep on this Affirm thing really quickly. There's a 97. We have to remember how markets work. Obviously, the boys understand this. So this is for the audience. Markets are forward looking. You guys aren't buying Tesla and all of these companies because they have an autonomous car today. You're buying it because you believe that they're going to have an autonomous car in the future. Affirm, in the 6th Street announcement, is buying $4 billion worth of loans today, not 25 basis points from now. They're buying it today, and they're front running the announcement because there's a 97% chance it's going to come true. So as we get more clarity and more information from the macro and that chance of rate cuts coming in, I bet they're seeing loan cuts already. I don't even think we need to see the 25 basis point cut because the certainty of it happening is already being priced in. Is there a chance that that's happening, Roy?
Yeah, I mean, we'll see. I think quarter four is going to be very telling just because it's going to show the direction of that. I still am just not that bullish on buy now, pay later, as a standalone product. But yeah, no, this is good for SoFi though. It's showing that demand.
Yeah. So speaking of the Galileo clients, Roy set it up earlier. But
Tried.
yeah, Galileo partnered with a company that they've already been partnering with for years. Mesh Payments teams up with SoFi and Galileo for expense management innovation. Okay. This happened on December 12th. What is so interesting about this deal, Tevis, that potentially is different than all the other partnerships? Because we've already been working with Mesh Payments since like 2021 or 2022. So what changed?
I mean, SoFi is using Galileo right now. Like they're vertically integrated with Galileo, which they weren't till a couple of months ago. And there's having the combination of the two provides some benefits to be like essentially a one-stop shop provider, because you have the processing, then you have all the back-end technical aspects, and then you have like the partner bank. So that really brings into light this AWS of finance aspect, because you're now just covering more bases for these people, right? So whereas before you might have been covering one aspect for Mesh or another, now you're actually including SoFi itself into the fold. And so it's like a SoFi Galileo collaboration.
Roy, give us some more. There's a certain word or aspect that I wanted included in that. Give a little bit more explanation.
I don't know that I have it. I mean, like the one thing that stuck out to me is that I mean, it's obviously a deeper level partnership, but the key benefits, of the partnership, regulatory expertise is something, of course, that Noda has been pounding the table on, that modern banking core. So I think this adds fuel to that thesis that fintechs that are concerned after the Synapse collapse because of regulatory stuff are saying, hey, these guys have it.
So yes, I completely agree with that as well, that Galileo has better strict compliance standards than Synapse or maybe the other players that might go bankrupt one day. The part that I wanted to highlight, so we saw a deal before from Rapid Finance that was tapping both Galileo and SoFi. So it's not the first company to do both. But we had no indication on whether Rapid Finance was using the actual core banking feature, like Cyberbank Digital, right? Mm-hmm. So that's the part where they said in here, let me share my screen. This is essentially the first deal that's using SoFi Bank for their banking or like sponsor bank technology. Then they're using Galileo for payment services, and then they're using Technisys for the banking core. All three in one shot. With SoFi and Galileo under one roof, we empower partners like Mesh Payments to harness Galileo's advanced cloud-based banking core. This is a Technisys client. It's a Galileo payments client, it's a Technisys client, and it's a SoFi Bank client. It's the first 3-in-1 that the business has ever seen.
That's awesome.
That's freaking cool. So
Yeah.
they're not very big. They process about $1 billion in payments per year. It's not, I mean, it sounds huge, but it's not that big. But on a per member basis, they probably will have somewhere around the highest average revenue per user than any of the other Galileo clients, because they have this trifecta, which hopefully, if they're taking a page out of like this Google or Microsoft or any of these, has a bundling cost effect where they're cheaper to work with all three than to work with 3 separate providers. What else did you guys see this week that got you very excited, or potentially got you down?
It was when I was preparing and looking at the float count for PayPal. I was looking at I was using visual charts and looking at several of the other companies that I hold. And then Chris did a post on this as well, the stock-based compensation for SoFi. And I was like, yeah, that's the thing. It's up, quite a bit. I think it was 33% since they initially went public. That might be a little bit high.
SoFi?
But I mean, it's the reality of companies that are newer, that are growing aggressively. Stock-based compensation is certainly there. But yeah, that's like the only negative out of a very, very good week for SoFi. And I loved that Mesh news just because of that Cyberbank core. Like, I didn't catch that there's a trifecta right there, but I mean, that was just awesome.
What's it called? So I think most of the actual compensation that brought SoFi from 800 million shares to 1.1 billion was large deals. It wasn't just stock-based comp. Well, I mean, it was stock-based comp, but it was stock-based comp to acquire businesses. So they were giving that comp to Technisys employees.
In part, yes.
Yeah, but like a large part. So the 2 ones were the convertible note 2029 deal, and then Technisys as well. Like that alone, I think was $90 million or something like that. 86 million in stock-based compensation, full stock-based compensation deal.
Yeah, I'm not saying it was unwarranted. I'm just saying, it was the reality of like, oh yeah, the float is much, much larger.
And if I could defend SoFi one more time, they are not calling for 2026. So if people are worried about dilution, they're not calling for a certain amount of net income in 2026. They're calling for a certain amount of EPS, which will account for their float. So even if, for example, let's say they triple in the amount of shares outstanding, hopefully that means that they are expecting an unbelievable level of growth to hit that 55 to 80 cent EPS mark, which essentially would average it out for you.
No, yeah, that's a nice thing. Is like when the company's performing and the stock is also performing, no one cares about SBC. Here, I think it's warranted. It's fine. It's just something that is like a reminder of like, oh yeah, the float size has grown quite a bit. Versus Tevis asked me not to name the other company, but PayPal. It's going to be under $1 billion, probably in Q1, depending on, of course, the stock price and how aggressive they are in Q1.
Yeah. Tevis, you got something to tell us?
Somebody asked if I was bearish on it. I was like, I'm bullish on it. Just don't want to buy it at $80.
Are there any Palantir people that do buy it at $80?
I don't know, man.
Some people are saying it's 100x from here or something.
Here. Yeah, that guy's probably buying it at $80.
He must be.
He should be.
I mean, like, there's probably people that just DCA'd by a set amount, no matter what, that they're just on autopilot. And I know that there's institutions that are buying it for a couple of reasons. They just joined NASDAQ 100. But yeah, I have not bought. I should have bought when it fell, to just a little over 20. I sold cash secured puts instead, which was fine. Made some money, but missed out on a lot more. But yeah, I've not bought since it was above 20. Well, 20, 22, 23.
Dude, it's getting like it's such a crazy market out there because I am doing cash secured puts and I'm not getting hit on anything. But then the moment I do covered calls, I have to roll it like almost immediately. And it's just like I don't even want to do covered calls at this point. I just want to do the sell side.
Yeah, in a bull market, you have to be very careful with covered calls, and in a bear market, you have to be very careful with cash secured puts because they'll tend to get filled. Um, the one it's actually a little bit easier right now in a bull market than a bear market, just because in the bull market, there's almost no scenarios where a dip lasts very long. So even if you get assigned with a cash secured put, unless it's a terrible company, or there's something that goes wrong with it, or it's just like way up and it needs to fall, you'll probably be pretty happy. Versus like in a bear market rallies are even more volatile than any kind of a rally, except for maybe the Trump election night rally. That one was insane. But it's just so violent that covered calls can also get blown up in that scenario. But I'm having the same phenomenon where we have to be very, very careful with my covered calls and the cash secured puts. It's like, okay, right there at the money. That's great.
I'll in the after hours chat, I'll let you guys know my trade this week on Broadcom.
I thought you were gonna say on SoFi. I was like, way to hook him.
Oh, no, not on SoFi. But next week I am doing options with SoFi, so I can talk a little bit about that too.
Oh yeah, tell us what strikes so we know how high it will go.
Hey man, I did cash secured puts on SoFi and didn't get called, and I'm probably going to do that again. The 15s were like really great.
But you're doing cash secured puts on SoFi?
Mm-hmm.
Oh man. Sorry, I might have to sell some.
No, because the cash secured. I mean, the cash secured put is a I don't know. Yeah, you're right. Maybe we need to sell.
Yeah, it's inverse Tevis. We have to remember it's inverse Tevis.
Yeah.
Hey
so
man,
what can possibly go wrong for Tevis? So yeah, like so.
When do you write those? Is that why we jumped down to 15?
I didn't get hit on those, so I locked that money in, Tanner.
Yeah, but when you sold them, it was when we fell, right?
I gotta check.
When did you write them?
I think I opened it on Monday and then I closed it, I think, yesterday.
Intra-week was bad.
Yeah.
Yeah, I'm going to do it again this week, so just get ready for it.
You jerk.
You hear that, everyone?
Hey, man. Talk all the shit you want. Talk all the shit you want. Let's compare how much gains you locked in this week versus how much I locked in this week.
I didn't lock in much. However, I did.
Wow.
I will share with you guys, maybe not even in the after hours, but I got into a play recently that has started to pay some disgusting dividends, which is not like me.
I know exactly what that is.
Yeah. and I got to be honest with you. It's fun. It is fun. But
the problem with that is that like it pays dividends, but it doesn't move. And so
it does move.
You got to be careful that you don't underperform.
Is it a yield max?
We'll talk about it later.
Because if it's a yield max, we got to get Steven to yell at you.
It was Steven that told me to get into this.
Steven,
he told you to get in a yield max? I don't think so.
No. You are making up your own conclusions and tying it into this story. You said yield max.
Okay. Yeah, if it's not yield max, maybe it's fine. So
I'm just saying Steve did not. Steve is telling me to buy this, and I've been buying a little bit, and it's been fun.
Yeah, Steve would also tell you to buy block. So
yeah, and Pokemon.
He doesn't get it all right.
I did sell out of Square, and now I don't know if anyone remembers this. We had Steve on. It might have been an after hours conversation. I said in 9 months, Steve is going to buy this company. I said that. Okay. I said before the year ends. Now he's super bullish on it. He told me, he said, Tanner, there's not a chance in heck that he is going to be buying Square. He said that he does not like Jack Dorsey. He's not buying it. Now I'm seeing him on every podcast pumping his own positions. Dude's out of his mind. And by the way, I'm not talking to him behind his back because I invited him on this thing and he turned me down. So you deserve this, Steve. But that being said, I have one more thing that I wanted to cover for SoFi before we get going into the after hours. And then I have some positions that I might be a little bit of a sheep and following some people into that you guys are going to love talking about on the after hours.
Oh, okay. That sounds interesting.
2 new positions. I might do equal weighting into both. I'm a disgusting sheep and buying late, but I want in.
Hims and Palantir. Okay, got it.
There's no good reason. I understand the Palantir, but there's no good reason you can give us that you're not even into Hims yet. Like, it's just.
I just don't want to buy pharmaceuticals.
Yeah, circle of competence thing. So.
Yeah.
Currently, can you put up this comment?
Jeez.
I know, right? I'm rich.
I currently hold $7 deep in the money call options expiring in January 2026. Interestingly, while the stock rose by 2.14%, my options decreased by 2.36%. Could you provide insight on whether holding deep in the money calls carries significant risk?
Isn't that just time value?
Yeah,
like,
I mean, that's
discrepancy would happen.
That's my understanding, but this is your field. This is your work.
It's not, I mean, Roy, feel free to jump in, but I think that's just the time value because it's not a huge difference. There's a lot of time left in it.
Yeah, sorry, I was looking at the comments.
His option increased slightly more than the stock, but it's like you have an option expiring 3 years from now.
So part of that might just be, it's a $7 deep in the call. It could just be that maybe that's not a very liquid strike. And so sometimes those can give you some noise. For instance, it gives you the price between the bid and the ask. And so it could just be that there's really no one that's on the ask side or the bid side. So it really, really skews that average, even though it's not going to fill.
He didn't clarify whether there were covered calls or long calls that he bought. I assume they were calls that he bought that he owns.
Deep in the money call options. So that's a call. Yeah, the 2.14, like if that was a January 2025, that would be theta, even though it's deep in the money. But 26 shouldn't be much theta. Row hasn't changed because Treasury hasn't cut yet. Vega really shouldn't have either because it's still been pretty volatile. I would just guess it's probably noise on a illiquid option, possibly. And so just kind of keep an eye on it. And on those, like on the percent gain, like if you're not anywhere close to actually selling, like don't sweat those small short-term movements.
See, Tanner, I know you don't do options, but this is how you make money. What this guy has done, 600 call options that give him the right to purchase SoFi at $7 in 2027. You can sit there with your shares all you want, and you can get a nice little, 100% gain here and there. But that guy is going to get a lot of premium.
I'm listening to you guys have your nightmare stories about how you guys are getting buried in positions. It's okay to have a position. Like people consider me being high risk. I just I want to bet on super innovative companies and also have the lowest risk possible because I have no expiry dates.
Yeah.
As long as the company is not crap, like SoFi as a position would have been not great. Well, I mean, that's not true. That's not true for writing options, but still, I'm fine with my strategy. I will be working it in, but it'll be.
I did start a position in New last week, but that was only in leaps, right? So it's like a similar thing, but New has already run quite a bit, and the leaps are like out of the money leaps, so I can just get more contracts, right? So I think I did 15s. I don't know. I talked with Roy about this last week. I think on the Bootleg Weekly, like it's just such a good way I feel to dip your foot in without necessarily doing so with a large amount of capital.
It's all right.
Yeah. You don't basically option.
All these people getting used to 40% gains is like you're gonna have bad years ahead.
I'm not saying most of my positions are long on shares. I'm not like going full Jesse where my entire portfolio is like leaps.
Brother, you're headed that direction. You have you get into a gambler mentality from time to time. Okay. We saw it whenever you were sports betting, and now it's just creeping its way into your actual portfolio with real money. It's okay if you're writing options. I completely agree with that, but getting into leaps is like it's just getting into more degeneracy.
So let me address that. Leaps are, I mean, you can regard even like equities as degeneracy. So it just, it depends where you draw the line. 0 DTE, like out of the money, that's like pure degeneracy for options. Leaps are the opposite of that usually. And I'm sorry if I mispronounced that, but Diraj did that was really, really smart is he either bought already in the money leap options and gave himself time. So he could have done 2027. 2026 is great. It gives him more than a year. That's good if there's a short term, or as far as like with taxes, that it gives you flexibility. But he didn't get super greedy. He could have been like, I don't know if it was $20 or $25 options, whatever the highest was on the table. Just say, hey, I'm going to buy them because they're really, really cheap. Usually they're cheap for a reason. So
those would have gone up more though. Just saying.
Yeah. Oh yeah.
Way more.
I mean, maybe this aggressive. Yes, absolutely. But that's a gambler's mentality. And retail tends to do that. This fellow did not. Basically going for the cheapest option possible, and then they're like, oh, if I even take a year off, it's even cheaper. Sometimes that works and it prints money, but over the long term, you're probably going to lose money with that strategy. You can even be very conservative with leaps and do something. Let me actually pull this up because I'm curious.
I mean, it really depends on what your strategy is, right? Like if you want to have max appreciation, like if you think that SoFi is going to go to 30, let's say, or SoFi was at 6 and you think it's going to go to 20 by the end of the year, then you're better off buying them out of the money because those will appreciate the fastest. But if you actually want to own those shares and take assignment essentially of those shares over the long term, then in the money or at the money is like Tanner. I'm just saying it's a strategy that you incorporate. It's a tool in your toolbox because you were bullish for new at like $4. In addition to your shares, what if you bought a couple of leaps at $4? Those things would be up like 500%, 600%.
I get it, but I don't agree with the idea of, oh, look at what you could have been writing leap options on Nvidia the whole way up, and like I could have been writing leap options on skills and been all the way down. Like there's
it's
examples where
though. It's asymmetric. Like let's say you write on both Nvidia and on skills, right?
Yes.
Skills is going to go to 0. Nvidia is going to go up 20x.
Yep. No, I agree with that, but that's like the problem. That's the way I think about growth investing. I think if I make a bunch of these bets, like some of them can literally go to 0 and other ones can 5x, and then the 5x pays for every single mistake.
Yeah, so it's just a derivative on growth. It's level 2 of growth investing.
I know, but I don't have an expiry on equities. And
you don't necessarily need to because you can always just roll it out, man.
Not always.
I mean, if you have 2 years time horizon, then like more often than not, you're going to find good opportunities to roll it out.
Yeah, but as time goes on, you're facing that decay anyway. So it's all like
if
it's not weighted to benefit the buyer of the leaps. It's weighted to be a bet. Like I don't know. I just think yeah, Steve got destroyed just rolling it out. TJ got destroyed doing Palantir as well. I think he's still holding on to these.
He's doing covered calls, man. He's not doing long calls. That's why he's getting destroyed because he has to give up the shares at like $35.
Throw up my screen real quick, Tanner. So this is January 15, 2027. So this is further out. So even more conservative. So I just want to show you, I'm not advocating for this. I'm not saying somebody should do this. I'm not saying you should do this, Tanner. But this, I want to get clear up the idea like that leaps are like super duper risky. They're more risky than stock, but if you do it right. So if, for instance, I was like, okay, I'm not happy with my SoFi position. I want a lot more, but I want to do it rather than buying shares. I want to either do margin or have some sort of multiplier. What you can do instead of margin is buy something like this. So these are not the strikes that the friend that gave $50 did. These are a further year out. But you can see the $7 strike would cost, a little bit over $1,000 versus if you bought 100 shares, it would cost $1,600. So it's almost 60%. It's a little bit better than 50% cheaper to just straight up buy this. Now the benefit of this, if you go over here, you can see delta is 90.47. And so that means every dollar that SoFi increases, you get 90% of that. So for basically 2/3 of the price of the SoFi shares, you can instead get 90% of the gains. And here's the gamma. So as every dollar moves up, the gamma shifts over to the delta until you see something like that, where it's deep in the money. This is a $3 strike. And as far as theta, I mean, it's nothing. When you're deep in the money, theta influences it a lot less, but this is also several years out. Vega, is kind of meaningless. Also for deep in the money, you can see Vega actually rises the further out of the money that it is. And I don't think they have row here, but that affects everything equally as far as the options.
I'm surprised how cheap that is. $9 for a $7 call. Like what you had?
1,050, 1,070, something like that.
No, but like there's only what, like $2 in there? That's the entire extrinsic?
Yes. Mm-hmm.
Okay. Like that's so cheap to me.
It is. Now the risk with that is if
it's like $1 per year in extrinsic value.
Yeah.
Like what the heck?
And here's the risk. So the risk is if there's a black swan event and it cuts SoFi in half, it's at $8. Those won't be worth very much. It'll go down. Like we could do a simulated thing, but probably
$2 or $3 because it'll have the extrinsic left, and then if SoFi is $1 above the 7, then $3 is what you got.
Yeah, but like with 2 years, even like you would think that there would be some sort of recovery at some point. It can be dead money for a little while, but it's fairly safe. There's always risk. I mean, there's risk in investing too, but that's like one of the very, very conservative ways to actually involve leverage if you want to form a leverage without using margin debt.
I'm like I said, I don't think I didn't say this here, but like I'm not even anti it. I'm just defending it because it's like, Tanner isn't doing this and it's a foolproof system. And it's like, well, no, I don't agree with that. If I see opportunities to do this, I will. Like, I don't mind writing leaps on companies that I think will go up, but in at these times, I'm like, I don't know.
Let me meet you in the middle, Tanner, because I don't think it's foolproof. Like Roy and I are both highlighting the risks involved with it. And I'm not saying that's some like silver bullet. The thing for me, I'm not going full degen, maybe not just yet, but I think the thing for me is what I'm realizing or what I realized during this run up is that stuff ran up in 2021 or 2020, 2021. And I was like, wow, this is amazing. I have all of these paper gains and this is great. And then when the market fell in 2022 and partially through 2023, my mentality was accumulate as much as you can because you can be right on a small number of names that you know very well. And those names, if you have enough shares in them, can be what changes your life entirely, right? Like people who found Tesla in 2017, even 2018, even their life has changed because they put $10,000 and it turns into like $800,000 or whatever. And so my point is okay, I did that for SoFi and I built a significant position for SoFi, and SoFi has not done a move like Tesla yet, but I'm realizing, oh crap, like how many SoFis am I going to find out there, right? Before I like diversify, to use a Peter Lynch-ism. And I realized that, okay, well, if I cannot accumulate fast enough in shares, but my conviction is all-time high, then adding a form of leverage on top of that, of course, controlled, is a way for me to fully capitalize on what I think is going to happen anyways. Because, I could have $100,000 in SoFi and it goes to $200,000 or even $300,000. Is my life going to be changed? No, it's not. But if you have, I don't know, $100,000 in SoFi and you have $20,000 in leaps, you get what I'm saying? It's a little bit different. But the underlying bedrock of that whole mentality of that realization is that I'm really limiting myself to how many opportunities am I going to find that I'm as bullish on as SoFi, that I'm as knowledgeable on as SoFi. Yeah.
No, I get you. I like, I don't know. I don't have anything else to add on it. And I think that it's something that also is Yeah, I was just gonna say we'll talk more in the after hours for sure. But
Can I share one more example real quick on a different ticker?
sure, I do still have some news on SoFi though. But
Okay.
so don't make it too long.
It's
All
going
right.
to be
No, it'll be short. This is PayPal. Throw that, please. So I know it's a little bit hard to see, but if I zoom in, I can't see anything. I need a bigger screen. So it's 91.30 right now. This is looking at as far out as you can. So January 2027. So over 2 years out. If we were, and I would actually take the 50 strike just because there's not much volume in the others. For the 50 strike leap. So this is deep in the money. It's to imagine it falling from 91 to 50 is pretty unlikely. So they're very expensive. It's probably $4,800 you'd be paying for this, but you're getting 87% because of the delta of the value of 100 shares at basically half the cost. Like it's not necessarily a no-brainer. Like if PayPal is a terrible company and it melts down and stuff, like there's pain in it. But I'm just saying options are not always tools of the degenerate. They can also be a very good form of hedging. We won't even talk about that because that'll derail us even further. But yeah, I just want to push back against, that this is a degenerate tool. It's not in the right hands if you know what you're doing. If you've measured the risk, there's risk in everything. It's not that bad with this type.
You just jogged my memory, right? Perfect example. Our favorite Nancy Pelosi, after Broadcom went up 25% yesterday, Unusual Whales or one of these guys posted that a reminder that Pelosi had bought Broadcom not through shares, but through $80 calls, like very, very deep in the money calls. And that those calls were up like 80% in the last 3 months because of the move that Broadcom had done. And so, I mean, you have it right there. She's doing the exact same thing using leverage essentially. And then you also get an added premium if it goes up faster.
He's using leverage.
Her husband?
Yeah,
they're using leverage.
Yeah. I think it's her knowledge, his trading expertise.
I'm sure she would never share her knowledge with him.
Yeah. Yeah. Big ups to Paul Pelosi. All right. Let's jump on over though, because I want to get through like 2 more topics really quick, just because we're on the SoFi Weekly.
Well, real quick, one little
not a chance. So SoFi short interest. This actually was announced for the end of November. Shares traded short on SoFi, 136 million shares. Surprising at all?
Nope.
Not Price action will push them out.
What do you guys think for December 15th?
Lower than this.
Yeah,
lower.
The price rose, so lower.
Lower? Yeah. Midway through the week, I thought it was going to see a big spike, but yeah, you could be potentially right that this, this is going to continue to climb.
The rate of decline is actually accelerating.
Oh, okay. That's interesting as well. I have here in the blue, this was the percentage of shares traded short over time, and then correlating those dates with SoFi share price, how they've traded over time. So wonder what the big catalyst is for change of shares traded short. It seems like, by the way, there's a lot of chart crime happening here, so just be careful with that. These are not logged the same way, but
that is against the law in Canada, so it is no joke.
Yeah. Okay. Lastly, this came out today. This is probably the most degenerate post that we'll be talking about, because it's not SoFi news at all. But that's not true. But this is Tiger Woods taking a shot at the SoFi Center. Tell me if you guys notice anything.
It was a bit of branding there.
It was his great stroke. He did great here. This is the SoFi Center. This is going to be the new, not even just new stadium, but the entirely new sport that is going to be released in January, or at least go live in January, where they have massive Samsung screens here. The entire sport is not called TGL. It's called TGL presented by SoFi. If you even see articles talking about this thing, it'll say the full name. So the branding is crazy. It's all over the place. Are you guys interested in this? Do you think this is going to matter for customer acquisition cost, or is this just for brand awareness and overall, like, it'll be impossible to measure?
I mean, it's going to be impossible to measure.
Yeah, the second one.
But it does tend to make an impact. There's a reason why so many financial institutions have their names on stadiums and branding deals like this. It tends to build trust, name recognition, and you acquire more clients. There's a cost to it, but they can probably say and measure whether that campaign is working. Although it's some sort of a deal where they can't just be like, well, it's not working, we're out. But we can't. We'll just see growth.
You also see SoFi rolling out alternative assets and private investing and all of this stuff. And then next month, they're going to come out advertising the biggest rich old white dude sport there is in the planet. So perfect, very target rich, from a customer acquisition perspective.
Yeah, I think I was thinking about it. It's like, what's the next sport that they're going to get into? I was like, it's going to be like tennis or something at this point. Like
squash or something.
Yeah. Well, hopefully a little bit bigger than the squash audience, but you can see that, right? Like if you look at the companies that advertise whenever you're watching soccer, basketball, baseball.
So here's the thing. They should absolutely, and I'm just going to go out on a limb and say it's a prediction, but they should absolutely have soccer as their next sport to coincide with the World Cup in 2026, especially because SoFi Stadium is holding some of those matches.
And it seems to fit at least the stereotypical client base of SoFi too. Maybe they're trying to reach outside of that, but that might be the only reason not to do that. But
Messi plays in the US now, man. It's coming to the US. So I know, like, the argument last year that we would have made for soccer would have been if they're chasing international expansion, then yeah, absolutely. If they're going to the UK or whatever, then sponsor a Premier League team. But the World Cup is coming to this continent, so why not?
I still hold that argument. I think international companies like Nike, Adidas, Microsoft, Oracle, these, like, I don't know why those four were the ones that came to my mind instantly, but they can do soccer. But SoFi,
actually, I got another one. Yeah, finish your thought, but I have another one.
SoFi would be advertising, like 90% of the people watching won't even know, and then even if they go to look up that business, they wouldn't be able to do anything with them. So it'd just be all wasted advertising dollars. I think focusing on sports that are North American, like basketball, like the TGL or at that SoFi Stadium, are very, like, those, that is the audience.
And cricket.
Yeah, people in the chat are saying cricket or pickleball. That's great. But here's another thing that
Why would we do cricket?
Here's another thing that we're not thinking about. F1.
But once again,
rich old white dudes.
Super international. More international than North American.
I mean,
you like Euro sports. You're asking for football and Formula One. I want.
It makes sense, man. It makes sense. Put their logo on a car right beside the Palantir and the Celsius logo. Let's get it, baby.
That's it right there. NASCAR is the way to. That is how you do it. Okay. I think go American sports, because those, like, every person that, no wasted CAC dollars. Formula One, look at every company that's on there. Tell me how many just North American businesses are sponsored on there.
If they're gonna accept fucking 500 and 600 FICOs, then yeah, go for NASCAR. But, like, other than that, just,
I don't actually mean NASCAR, but I think, like, no, you know what? I do mean NASCAR. You're not going to derail me, okay? We want NASCAR.
I don't know about Wii. I want Formula One. So it's the same thing, just different category of vehicle.
Yeah, just wasted CAC dollars from you. This is why they
Honestly,
didn't hire you. They saw this prediction. They went, "This guy's going to lead our team."
bro. I guarantee you would have way more conversion on Formula than you would have on NASCAR. How many $170,000 a year plus people do you think are watching NASCAR every weekend?
I don't actually mean.
Like, I'm sorry to stereotype, but like, come on.
Curling, yes.
I would do NASCAR, UFC. These are good ones.
Honestly, like pickleball is, I don't know if that's a thing up in Canada, but it is growing insanely down here. So I don't know if there's a way to get in that as far as sponsorship, but
badminton.
I want everyone to know there's 453 people watching this right now. If we did a pickleball tournament, I'd be the #1 player. Okay. Don't say, is pickleball up in Canada? We play all the time.
Again, with the Wii, bro. Like, you are just making yourself even more nerdy every single stream we go on.
We?
I mean,
why do you say we? I've never played pickleball a day in my life.
This is what Canadians do.
I mean, I don't know if I can take that from you guys because you're both like the most American Canadians possible, and I mean that as a compliment. So
the first time I played pickleball was in Florida. So
see, yeah,
that sounds like a challenge. No, I'm trying to get some people riled up. Yeah, dude, SoFi slap competition. The SoFi.
Yeah, there's certain sports that they just wouldn't fit well with.
What is that called? The SoFi or the UFC slap? Power slap.
Hell yeah.
All right. Is pickleball a redneck sport? I wouldn't think that's true. I think it's more like a retiree.
No, NASCAR is, bro. NASCAR.
Oh,
that was your pick, remember?
No, I mean, it's more retiree pickleball, but there's a lot of younger people that play it too. And we live in a pretty affluent place. And yeah, they're converting tennis courts to pickleball courts. So, or at least there's talks of it.
Yeah. All right. Hour and 7 minutes, some sports, some options, lots of SoFi, but most importantly, Robinhood. No, I'm kidding. But most important,
not a sponsor.
Friendship and community. All right, we'll end it there. Yeah. Ladies and gentlemen, thank you all so much for watching. Really do appreciate your time.
Have a good night. I'm not using your stupid catchphrase, all right?